Why are millionaires holding on to their money instead of investing it in the stock market? Our wealth reporter Robert Frank is looking into it right now. Robert.
Hey, Maria. Well, today's millionaires have split personalities. They're bursting with confidence, but they're also hoarding cash. A new survey from U.S. Trust shows that 88% of millionaires feel financially secure. That's way up from last year. And 70% feel confident about their financial security. Another positive sign, most millionaires say their growth is their chief financial goal rather than their preservation of their wealth. Now, that marks a complete reversal from last year. But their cash holdings tell a very different story. 56% have substantial cash holdings. Only 16% plan to invest that cash over the next couple of months. Only 40% plan to invest it in the next 2 years. Now, studies show that the wealthy have more than $6 trillion in cash. U.S. Trust CEO or President Keith Banks told me that millionaires may be confident psychologically, but their money will follow later. Now, another view is that the wealthy are still haunted by the memories of 2009. Their fortunes may be back, but they still want cash as that safety blanket. Maria, back to you.
So some of that then will not go back into the market if they always want to have that safety blanket.
I think so. You know, we underestimate the fact that the memories of 2009 are so strong, even though a lot of their paper wealth is back. You know, a lot of these people who never thought they had to worry about cash had liquidity crises in 2009 and 2008. They just don't want to go back there.
Yeah, it's a great analysis. Robert, stay with us. We want to bring in some other voices to the mix. Some wealth experts talk about why so much money is on the sidelines and millionaires are holding off putting their money to work. Joining me right now is Martiak of Premier Wealth First Allied and Carrie Coghill of Coghill Investments. Good to see you both. Thanks for joining the conversation. So what do you think, Mark? Why do you think people are sitting on their money?
I think millionaire investors are sitting on their money because they have a bias toward being liquid and loss aversion. So the bias toward being liquid, loss aversion, and wealth preservation are three factors that really contribute greatly to that, especially in the aftermath of what happened in 08-09.
That's a conservative view of things. They're probably leaving some gains on the table by doing that, aren't they?
Oh, yeah, I agree.
Huge, big time.
I agree. When my clients call on a bad market day, they typically will ask, how much have I lost? When the market's up, they're not necessarily calling and saying, how much have I made?
That's a good point. Yeah.
So that's a key right there, I think. So they're worried about losing, and I'm calling them when they're losing and when they're making money.
Carrie, what do you say? Are your clients putting money to work? Where are they invested? And how much of, would you say, are sitting on cash?
Right. Well, Maria, I have to tell you, I was very surprised when I read this report because it's not the experience that we're seeing. The people, the high net worth individuals that we're working with, they don't want to sit in cash. They don't want their money doing nothing for them. And they want to make sure that they're maintaining purchasing power. But I think the interesting thing here has to do with the options and that it's not just about stocks, which, you know, are trading at highs. And it's not just about bonds, which we're very fearful of considering what's going on with the Fed. But it's about alternative assets. And where we're seeing money go with high net worth individuals are into alternative asset classes and strategies like long short strategies, managed future strategies, global macro strategies. And they're all very different, but yet it is something that high net worth individuals are very interested in.
You know, just this week, Robert, or Friday when we talked to Brady Dugan over at Credit Suisse, he confirmed to me that 30% of his accounts in the private bank are sitting in cash. 30%. But this has been the case throughout the bull market.
Yeah, and I think there's another really important point here to explain this. And that, you know, you had a great interview yesterday with Jim Grant, and he was talking about, you know, this obsession and this need for income. And risk right now is so mispriced. When I talk to the wealthy, what they tell me is that risk right now is mispriced in the market. They need income. They are putting money into stocks and into income-producing assets. But because there's so much risk attached with those investments, they're also on the other end of the barbell keeping a lot of cash. So I think that's part of the story as well.
What do you think it's going to take to get people to put money back into the market, Mark?
I think continued bull secular rally like we're experiencing, and I believe advisors advising their clients that there are opportunities out there during the right times when the market comes down, when we have a 5 to 10% pullback, that's when your advisors can really influence your clients. But I do think most high net worth and ultra high net worth clients are deliberate, intentionally so, when it comes to allocating their money into the market. And of course, let's not forget an asset class like art, where there's art and also the hard asset class like real estate. That money doesn't find its way into the market, but as our colleague noted, it finds its way into the alternative investment asset class.
And that's what Carrie's talking about, these long-short ideas. So Carrie, give us a sense of what you would tell clients today after the sell-off of 1,000+ points in Japan and this wild volatility in the U.S. today.
Well, what we're telling clients is exactly what we just heard before, which is we typically see volatility pick up. You know, markets don't go down in a straight line. I think these are some warning signs, and we're still very supportive of alternative assets. But I also think that higher net worth client, they're more connected to the larger issues. And I think they have a greater understanding of the problems that we have here at home that haven't gone away, that have to do with the debt and the deficit. They're concerned about the regulatory impact. They're concerned about the impact of the Affordable Care Act. So they get it. I think they get it a lot more so than a typical retail investor. So what we're seeing right now in the markets, we're really not looking at this as tremendous buying opportunities. We're a little more concerned that this is the precursor to some of these more global macro issues coming to the forefront.
So then I guess, Carrie, then you've got to believe that some of that money on the sidelines is not coming in.
Well, I don't think it's going to come into straight long-only strategies. Where we're seeing it come in and where we see high net worth individuals receptive are with these alternative type strategies that can manage risk a lot better than being long-only.
Robert, do you see that as well, based on what you're looking at in terms of wealthier investors today? Do they want longer and sort of a little more complicated strategies rather than just straight long only?
They just want places to put their money. I mean, all of this cash pouring out for central banks, let's face it, is really going into asset holders. And those are asset holders of stocks, financial assets, asset holders of real estate. So we now have an overcapitalized 1%, and they are just looking for anywhere to put their money where it's going to be safe and maybe appreciate. So that's art, it's cars, it's stocks, it's real estate. All of these sectors are growing because of liquidity from the central bank. They just are looking for places to put it.
Makes a lot of sense. Thank you, everybody. We appreciate it, and we'll see you soon.
Thank you.